Chapter 8 sees the introduction of the GST Clearing account. In previous chapters we'd called the GST ledger just GST. Not going to do that anymore. What we're going to do is call it GST Clearing. So it's going to be really important that we use the word clearing, and the reason why we'll speak about in another video, but for now just remember that it's very important that we use the term GST Clearing. So the GST Clearing is still a liability account, so it's still going to increase on the credit side and decrease on the debit side. Where does the information that goes into that ledger come from? It comes from our journals. So we've got our special journals, our receipts journal, our payments journal, our sales journal, and our purchases journal. So let's look at the GST that we collect and charge our customers. So that'll come from our cash receipts journal and our sales journal. So when we charge or collect GST, that goes into our GST pot, and that increases our liability. So in this case, our liability is going to go up by $700 and $400. That'll be a total of $1,100. Looking at how that would go or get posted into the ledgers, we've got the GST clearing ledger on the right hand side here. So the first thing we've got is all the GST we collected of $700. That's going to increase our liability. So when it increases our liability, that's always going to be a credit. We've then got a matching debit to that, which will go into cash at bank. So we're going to have a debit over here to match up with that. And then it's just a matter of getting our references right. So we write GST clearing there, and very importantly, we must use the word clearing. And then we have cash in the GST ledger. Let's look at the $400 of GST that we've charged our customers or our debtors. That is going to increase our liability further. So that is going to go over here in the GST ledger as a credit. What will that match up with? Over in debtors control, debtors will owe us $400, so obviously that'll be a debit because that's going to increase debtors control. We'll then get our referencing right, making sure we're using the word clearing, and debtors control, that's pointing at the wrong ledger, but that should be at the debtors control ledger on the left hand side. Then got our payments journal and purchases journal. We've already learned that when we owe the government money, in this case $1,100 for GST, we get to take out whatever we've paid or been charged by our suppliers. So in this case, we've paid $300 and been charged $500, so we'll take that $800 out, and that'll lower our GST liability. So in this case, we only owe $300. How would that look in the ledger? Well, the first figure we've got is the GST that we've paid. That's up in the cash payments journal. So the effect that will have is that will reduce our liability. So that's always going to be a debit on the in the GST ledger, and that'll jump in there. The matching transaction or entry to that will go into cash at bank. We're paying $300. So obviously when we pay money, that reduces cash, and that'll be a credit. We've then got, getting our references right, of course, we've got GST referencing the cash ledger and the cash ledger referencing GST clearing. We've got $500 of GST that we've charged our creditors, so that'll reduce our liability again. So in this case, we're going to increase our liability over here. That'll go up, which is always a credit. We owe creditors more money, and then that'll match up with a debit over here, where we'll reduce our liability with a debit entry. Get our references right, so in creditors control, in GST we'll write a reference of creditors control, and then we'll write GST clearing as our reference in GST. Does this firm have a GST asset or liability? So looking at the transactions that we've posted, so we'll need to balance it. So we add up the bigger side, which is going to be the credit side, put that total on the other side, subtract away the difference, and carry the balance forward. So in this case, the GST clearing account has a credit balance, so that must mean it's a liability. So that would show up as a current liability, and note the name of it. We're not going to call it GST liability in the balance sheet. We're writing the name of the ledger, so it's very important that we write GST clearing. Looking at what will happen, where this chapter is a little bit different to our other chapters, is that we owe $300, so at some point we're actually going to have to settle that. What does that mean? That means we're going to need to pay the government the $300. Looking at a slightly different ledger, if we balance this one out, what we'll get is a debit balance of 500, and that must mean if it's got a debit balance, that's actually an asset. So what we'll do is we'll put GST Clearing under the current assets section instead. Just remember, we're writing the name of the account in the balance sheet as GST Clearing, not as GST Asset or GST Refund. So remember to use the word clearing. And what this means is that at some point we're owed $500, so the government will give us $500. In summary, looking at GST Clearing, it goes up on the credit side, goes down on the debit side. Where do those figures come from? Well, the credits will come from the cash receipts journal and the sales journal, and the debits will come from the cash payments journal and the purchases journal.